Welcome to the inaugural series of The Impact Bite, the podcast which showcases the various perspectives of different investor categories in relation to the current investment landscape. My name is Will Lowry, and I co-lead the Institutional Investor Network at ClearlySo, Europe's leading impact investment bank. I will be your host for this week's daily series, in which I look to test investors' genuine appetite for impact investments, as well as challenging 5 highly relevant yet different investor profiles in order to gauge whether the investor lens really does vary across family office, impact funds, private equity, venture capital trusts, and corporate venture capital amidst the post-COVID-19 investment environment. Welcome to the very first episode of this week's Impact Bite series, and it is an absolute pleasure to be joined by our private equity panelist, David Atkinson. David joined Panoramic in early 2016 and is now a senior investment manager working across all areas of origination, execution, and portfolio management. David has been involved in 7 of Panoramic Fund 2's investments to date, and I had the pleasure of meeting David back in October 2019 while discussing the Oddbox Series A. We immediately hit it off thanks to our joint passion for entrepreneurship, food, and sport. Although David certainly does hold the bragging rights after completing the Keltman, which for those listeners who may not have come across this before, is an extreme Ironman in Scotland. David, what on earth were you thinking?
Oh, that was thanks for that was a long time ago and a long day out indeed. But probably feels fun now compared to juggling work and my wife's business and looking after 2 kids during lockdown, and I'm sure there are lots of people out there in the same boat. So hopefully normality will come back soon. But thanks very much for having me on.
It's an absolute pleasure. We're really looking forward to this. And David, as you know, the aim of this Impact Bite series is to share your insights as a private equity investor as you navigate your way through the private markets in relatively unprecedented times. So I guess a great place to start is by asking, what has been your key takeaway or learning about the private equity or venture market during this period of lockdown?
Yeah, I guess we're 2 months into lockdown, so it's relatively early days as to how things will develop in the economy. I think the VC market overall so far feels pretty resilient. Most counterparts that I'm speaking to seem keen to continue to look at new investment opportunities, which I think is very positive and is exactly what's going to be needed if we're going to come out of what's going to be as you say, a fairly tough time with the growth with growth companies in reasonable shape.
And I guess just a side question there, David, if possible. You mentioned that your counterparts are open to reviewing deals at the minute, which is really positive. From my side, I've definitely heard that the party line from investors that they remain open for business as usual. Do you think that this varies according to investor type? Obviously, we're speaking to different types of investors this week. Do you think that there are any that may be more inclined to be active during these times than others?
Yeah, that's an interesting question. Certainly those funds which are under pressure to deploy, I guess, will continue to need to do that to some extent. We are a generalist investor focused on both buyouts and growth. So I think certainly some areas of the market are a lot slower than others. I guess those who are focused in technology specifically, they may not see much change from this, whereas others such as ourselves are taking a fairly I guess cautious approach, given we don't really know how the next 6 months is going to unfold, and also we're not not under too much pressure to continue to invest. So I think it puts us in a relatively strong position from that perspective.
Given the cautious approach which many investors are taking, largely due to that uncertain period of 6 months, that uncertainty going forward, do you think that has had an impact on the investor-founder dynamic? And do you think that that's going to change or affect your own investment process going forward?
Yeah, I don't think it does change the investor-founder dynamic. For those businesses that we're already invested in, I think it's a really good opportunity for private equity to show what it can do. Because it's been a great, we've been able to help out on issues that we know, quite a lot about, finance, forecasting, and liquidity, most importantly, which are, at the top of the priority list at the moment. I think similarly, the process for us at least remains the same. It's just trickier without being able to meet face to face and see businesses in the flesh, and then combined with the economic uncertainty, things are just going to take slightly longer, and it's about balancing what you can do remotely with taking a considered approach.
Yeah, that makes a lot of sense, and certainly we are definitely pushing the boundaries with our Zoom podcast series, as you can tell. I think that, just staying on that point very quickly, obviously valuations will have been impacted by COVID, and I guess by the uncertainty linked to that going forward. But do you think we'll see investors leaning on certain terms or structures to support valuation, I guess, going forward? So the likes of participating preference shares, in order to make deals happen?
Yeah, I think that there are ways of structuring things which can help bridge that kind of expectations gap in valuations, and using participating preference shares is certainly one of the effective ways of doing that, providing they're not used too aggressively. I think valuations generally, at the moment, I think seem to be holding up, surprisingly. But I think 6 months down the line, it could be a different story. And I guess it just depends. Each scenario is different. Based on stage of business and sector, and I guess level of competitiveness for that deal. So there remains a variety of factors that affect valuation. But yeah, I think that the structuring things, certainly having the flexibility to structure things can help for sure.
And going back to a point you mentioned earlier, about what a private equity house can bring to a deal beyond pure capital, I think that's an area worth just touching on, because we've had a number of corporate clients at ClearlySo who are looking to raise capital, and see the current uncertainty as a risk, and as such they've been requesting or have been hoping to target patient capital or family offices as a source of capital. Do you think that is potentially narrow-sighted in forgetting that private equity specialists can bring a whole host of advantages beyond pure financial capital?
Yeah, I think that family offices and private equity probably share some similarities in, as you say, being longer term generally. But yeah, I think that COVID has been a great opportunity for institutional investors to show how they can help businesses, and sometimes there's an overstatement of how much he can bring to the table. But I do believe in COVID, at least, it is a good opportunity for us to help focus on the financial aspects of the business while management focus on what they're good at. And I think that really, unburdens management a lot, because they, don't have to worry about, doing the C-build applications or worrying about liquidity or forecasting, because we can assist with that, and it allows them to focus on, what they're good at and what they want to be doing. So if that answers the questions, I think that, hopefully, it's a good opportunity to show where we can help.
And David, to now really put you on the spot and to try and get a bit of insight into your own secret sauce as an investor, I know that you're going to be very reluctant to give up your secret tips, but you kindly said you would offer maybe one or two. I was interested to see if you had any resources or tools or recommendations that you could suggest to other fellow investors as a result of your experience as a lockdown investor.
My top two tools, tips, resources. The first one, top tip, would probably be to kind of take time. I think no one really knows how it's going to play out, and I think once the government support kind of relents, it's going to be an interesting picture out there. So I think I think that, as I'm sure most investors will be doing, is taking their time with things. And I think the second thing, at least, that helps me is just trying to read as much as I can from a variety of sources, to, I guess, educate yourself as best as possible about how what happened in previous crises, and how other countries are handling things, what's happening in the States, and keeping abreast of a wide range of economic and political ongoings, to at least hopefully draw some sense out of what's happening and what might come, because no one really knows, I guess.
No, and if you did know, you certainly would be in a position to be shouting about it from the rooftops. I guess I'd be really interested to hear. I know that from our discussion so far, that it's clear that taking stock is important at this moment in time. But if you had to, or if you could invest in any deal tomorrow, in a hypothetical world, what would it be? So give us as much detail as you can in terms of potential sector, stage, B2B, B2C facing, investment amount, whether you're looking to maybe come into a business which has seen the valuation be impacted as a result of COVID, or maybe a sector which is really outperforming due to increased demand through this pandemic.
Panoramic invests, both at the growth end, but also a whole wide range of buyouts, MBOs, MBIs. We've not even done an employee buyout, and it's probably not the kind of exciting end of the scale, but for me at least, I think at the moment it would be a small management buyout, B2B focused. Operating in services around physical infrastructure or social infrastructure, where I do believe that what a positive thing to come from this will be a huge level of investment into physical and social infrastructure from the government. So probably around 3 to 4 million check size for us is ideal. Obviously profitable. With just a stable management team that you can back and trust, to drive the business. We've invested quite heavily across the regions, which is proved successful in the past to us. And in terms of valuation, just a business which is priced fairly. And based upon proper fundamentals of the business, that you can kind of tie back to something tangible.
You mentioned management team and the trust in management team. Could I ask you to rank 5 aspects of a business or an investment opportunity in order of importance for you, from your private equity investor lens? So the first one is management. Second is target market size. The third is impact. The fourth is near-term profitability. And then the last is high year-on-year growth.
Yeah. So I think for us, it's management team and profitability. Those two are right up there at the top of my list at the moment. Well, always, I guess, but particularly at the moment, a management team, as you mentioned, that you can trust and back. We don't manage businesses day to day. We back management teams to deliver on their business plan. And clearly at the moment, profitability and liquidity is absolutely fundamental. So those two at the top, and market size, growth, and impact. To avoid some of your question, kind of underneath that, all those things are certainly important. Market size, one thing, but obviously to take some of that size is equally important. And obviously, any institutional investor is going to say growth is important to them, and impact as well. If the business is doing things right and looking after its stakeholders, then it should also benefit from that.
Right, David, and now on to my favourite part of the Impact Bite podcast, the quick fire round, which I've been looking forward to since we came up with the idea for this series. I will say 3 statements to which I'll ask you to provide an immediate and hopefully genuine response. And the first one is private market prospects for the second half of 2020.
Yeah, I think from an investor perspective, there'll be some great opportunities to invest. I think private markets, I think undoubtedly it's going to be a challenging time for sure. But fingers crossed, things will be more positive than some predictions.
Impact investing, a required investment strategy or a personal preference?
Yeah, we're not impact investors per se, but I think it plays an important role in the investment arena.
And the last one, most surprising lockdown hobby?
I've been doing cold showers, and that's been great fun. And swimming in the sea a wee bit, so which in the west coast of Scotland is very cold, I can tell you. But it makes me feel great. So that's my lockdown. That's been my lockdown hobby.
Well, that ties in well with my introduction. As I said, you are an extreme Ironman or a Celt man, so that is a terrifying prospect and not one that I will be following.
Not at all.
But anyway, David, look, thank you ever so much for your time this morning. From my perspective, we could not have asked for a better panelist to kick off our Impact Bite series. And I know that all of our listeners will have found your comments incredibly insightful. It's certainly not every day that you hear a Celtman talking through the intricacies of the private equity market. So thank you very much again.
Oh, you're very welcome, Will, and great to chat. So thanks for your time. I really appreciate it.
I'll be back online at the same time tomorrow, so 12:30 on Tuesday, the 16th of June, with Eric Carlson from the H&M Venture Arm, to see whether the corporate venture capital mindset offers a different or complementary perspective to the wider investment landscape. You'll be able to access tomorrow's interview via the ClearlySo website, www.clearlyso.com/insight, or you can register for a direct notification via my own LinkedIn post. Either way, I hope you've enjoyed today's Lunchtime Investor Insights, and we'll be back with more of the same tomorrow.